Hi, everyone. Thanks for joining us today. Today, we're going to talk a little bit about geopolitical uncertainty and what happens in the market. Usually, people sell off positions just because of the surprise or the uncertainty of the whole ordeal. But we've looked through some technical data and found that sometimes that's not always the right reason to sell off your positions. So, Jeff, we went through a few different, I guess we went through a few different wars that we looked at just to find out the returns. And we find that, through the military conflicts, different operations that happen, that sometimes the market is extremely resilient and positive. So, I mean, we had ranges of coming out of the World War II in 1939 of a return of 108%, all the way up to the Gulf War in 1990 that showed 461% for, I guess, a preceding 10-year period. So that had great impact. We've got a couple operations that we just went through in January and February. Why don't we get into a little bit about how that impacted the volatility of oil?
Well, we wanted to write this blog simply to make the point that usually geopolitical risks are buying opportunities. Any kind of a sell-off is often short-lived, and we looked in that historical precedent with all these other wars that the U.S. has been involved with to show that in every single instance, the market's significantly higher 10 years later. And so we feel that given the strikes against Venezuela and now the strikes against Iran, it's created some volatility in stock prices, which we think will be short-lived. And we're using this opportunity to buy the dip rather than raise cash.
Right. So what happened with do you know the price fluctuations between um, WTI, Suncor, and Freehold royalties? Do you know it
Well, right,
offhand?
yeah. So because Iran is such a sensitive area because of the Strait of Hormuz closing, the price of oil has shot up. It got to well over $100 a barrel last week, and that seems to be a pressure point for the market. When you see oil above 100, um, it just could cause higher prices for the consumer. But we've seen it come back down. And if there is a resolution in Iran in the next couple of weeks, you will see the price of oil drop substantially. But right now, it's an uncertainty, and the market doesn't appreciate unknowns. So that's what's causing the volatility. We're pretty heavy on oil. Our clients, for the most part, own two oil stocks, and in addition to that, several pipelines. We own Suncor and Freehold Royalties. Suncor is up about 35% since, if you go back to right before the attack against Venezuela.
Mhm.
Freehold is up around 15% or so when you include the dividend. So I guess the question is, do we take some money off the table on Suncor? Probably not. They're doing really well on executing their plan. So we will hold it, but we're not buying more of it at this point.
Mhm. Okay. So if we go back to, I'm just going to go through some of the stats to give people an idea of what kind of returns that we saw for 10 years preceding these different military conflicts. So we actually listed about six of them, and I mentioned two: Gulf War in 1990 at 461%, the Korean War in 1950, 372%, Iraq War 2003, 117%. Bay of Pigs invasion, 108%, and World War II, 108%. So those are still, showing some positive resilience.
Yeah, and we should just specify that's how the market performed 10 years after the
Right.
commencement of those actions, right?
Hmm. Yeah.
Yeah.
So I don't know if there's anything else we want to touch on. I think that's,
Not really. I just wanted to write to say that normally geopolitical risks are a buying opportunity. And because we're seeing heightened volatility, I suppose my picture in the background is not helping my point, is it? Nevertheless, uh, so don't it's not something that we're going to make big changes over. This too shall pass.
yeah, this too shall pass. Okay, talk to you soon.
Yeah.
Thanks.
Okay. Bye.